Hi, this is AUDUSD and today it's Monday, 12th of August 2013 and the time is 10:43 GMT. We are looking at the H4 time frame of the pair and biases are strongly bearish. Pair starts falling again, so let's go to smaller time frames and see how we can pinpoint our exact entry point, and then we will get back to H4 and see how we can monitor the trade and what to look for during watching it. We are using Ichimoku Kinko Hio. You can see the cloud, the Kumo. You can see Tenkan-sen, the red line, Kijun-sen, the blue line, Chikou-span, the green line. Chikou-span imitates price action and it's shifted in the past. So we are going to the smallest time frame. This is the one. Let's see how things look like on the bigger time frames. We see that the pair on the daily time frame is resuming its big downtrend. Everything looks bearish here. We had the price trying to go under this formation on the lower border of the Kumo, but it found resistance and it's bouncing back. We see that the leading Kumo is bearish, and the distance between second span B and second span A, the two lines of the Kumo, the upper and the lower border. On a bearish Kumo, the upper border is formed by second span B and the lower from second span A. The opposite happens on a bullish Kumo. We see that the distance between the two lines, the two borders, is quite big, which shows that the bearish momentum is big, is increasing. So although there is a flat top Kumo here and a curved lower border, which is a bullish formation, things are definitely, the biases are definitely bearish. On the weekly chart, we see that after this big bullish candlestick, things are starting getting bearish again, and we see that the distance, the vertical distance and the horizontal distance from the leading Kumo is huge. It shows that biases are strongly bearish here. The leading Kumo, the edge of the leading Kumo, is sharp, pointing downwards. Definitely a bearish picture. Now let's go to H4 and let's start going one by one. Let's zoom in using the smaller time frames till we reach the M1 time frame. On the H1 chart, 1 hour chart, we see that biases are bearish, but the picture is still bullish because we have a bullish Kumo, but the leading edge is turned downwards, is not sharp pointing upwards, it's turned downwards. We have a flat bottom here, but there is distance to be covered till things get bearish, and they will be definitely bearish as soon as we have a bearish Kumo breakout, as soon as price goes below the Kumo, okay, goes through and below the Kumo. We see the Chikou-span, the green line, is just crossing the price, past price action, and it's going to go below it. We want it to go strongly below past price action. We want this candlestick to be more bearish, but anyway, we don't use H1 to pick our entry. We go to smaller time frames. M30, we want here to see the bearish Kumo breakout succeed. We don't enter while things look bullish. To have a 100% bearish picture here, we want to see the bearish Kumo breakout happening here, the price going below the Kumo. Chiku span turned downwards, not upwards, and preferably not going only below past price action, but also below the Kumo. We want Chiku span somewhere here. Of course, you may not wait till price goes here for you to enter, but seeing Chiku span going straight down and seeing a bearish Kumo breakout happening here is a good signal for you to get ready for your entry. On the M15 time frame, we see that we had a bearish Kumo breakout, but Chiku span goes up. We want it to go straight down. It goes below the Kumo, it goes below past price action, but we want it to be turned downwards, not upwards as it is here. And look at the edge of the leading Kumo. We don't want it to be flat or curved. We want it to be sharp, pointing downwards. When this becomes sharp, pointing downwards, and when this turns down, Chiku span turns down, we have one more confirmation to enter short, but we still have to pick our entry from the smaller time frame. So we go to M5. On M5 we see that price is moving, it went up for a while, it's now moving sideways, although we have a bearish Kumo, a big bearish Kumo, leading Kumo, but you see its edge is turned, is curved, and it's not as sharp as you would like it to be. And Chiku span, the green line, is tangled, it's going horizontally, and it's touching the price, past price. We want it to go straight down here in the open space, going straight down below past price action in order to enter short. And on the M1 time frame, we see here the reason for the picture which we show on the bigger time frames, which doesn't allow us to enter now yet. Price had made a bearish Kumo breakout, but it made a bullish Kumo breakout again, and now we want we will wait till we see a bearish Kumo breakout on the M1 time frame. If it doesn't happen, we don't enter, we stay out. We want to see a bearish Kumo breakout. We want to see the price going here below the Kumo. Let me insert an arrow here for you. We want to see price here, okay, in this space, and we want to see sorry for this, and we want to see Chiku span going below the Kumo but below past price action as well. We want to see Chiku span going here in the open space straight down, and we want to see the leading Kumo, its edge being sharp, pointing downwards, which is not the case here. Okay, so we wait till things look 100% bearish on M1. When they look 100% bearish on M1, we go to M5 to make sure things look bearish as well here. We discussed about the criteria. On M15 to make sure everything looks bearish, Chiku span goes down. On M30 to make sure everything looks bearish, we want the bearish Kumo breakout and Chiku span going straight down. H1, everything, price and price action and Chiku span looking bearish because it will take some hours for a bearish Kumo breakout. And on H4 we want to see what we see. We preferably would like to see Chiku span going below the Kumo. It will take some time to go below past price action. So this is it. We enter using M1. If we don't see a bearish Kumo breakout here with all the criteria met on the higher time frames, we don't enter. Okay? If we enter, everything is as we want it to be. We put our stop about 100 pips above past price, above our entry here, which is a safe place above the last swing high. We trail our stop using H1 time frame. We trail it 30-40 pips above each new lower high. When price goes up, it makes higher highs, higher lows. When price goes down, it makes lower highs, lower lows. And the new lower high, after making it, price will fall again and make a lower low. After it makes a new lower low, we will know that the new lower high is valid. So we will trail our stop from here, a few pips above the new valid lower high. This is the meaning of trailing our stop. Now, take profit. A take profit target, we can since we are entering during a bearish Kumo breakout on M30, a criterion, an exit criterion, a take profit target would be a bullish Kumo breakout on M30 on the same time frame. So let me see if we had something like that. For instance, the opposite. If we had entered long here on a bullish Kumo breakout on this time frame, let me insert a shape to show you how the entry and exit, how the take profit target with the Kumo breakout happens. If we had entered long here on M30, we should have exited now with the bearish Kumo breakout on the same time frame. So let me insert. And all this would be our profit from this trade. Now we will do the opposite in this particular case. We enter short here and we will exit when price goes down and then starts reversing upwards. Okay, so this is the logic behind entering with the Kumo breakout and exiting with the Kumo breakout. This is it. Monitor your trade from H4 time frame, and thanks for watching and happy pips.